Jesus Christ. This is for a buy limit. Yeah. So now we're using this illustration saying that price is trading downwards. So this will be bearish. Right. And we're expecting price to go bullish. When we say bullish, we want price to go long. We're expecting that when price comes to this zone here, it will buy. So we already put our order here with our long position. And remember, our long position indicates what? A buy, right? Saying that we want to buy to this high that has been created here. We're saying as this market is coming down, because now the market, remember the market is still up. Oh, it has not reached this zone, but because of your analysis, you have speculated that this market is going to come down. Let's assume the way dollar is now. Yeah, say dollar is currently 1,636, 1,603, at least 615 naira thereabout. Yeah. So let's assume dollar is 1,700. Now we are speculating that before I can buy this dollar, and I cannot buy dollar at 1.7 rate. I'm waiting that when dollar sell, the dollar drop down to like 1,200. Let's assume once this, let's use our call out tool now. This price here is what? 1,500 naira. 1,500. We want dollar to come down to 1,500. But up here, dollar is still at what? This price. Dollar is what? 1,000. Dollar is at 1,700. You understand? Please, you understand? So we are saying that this trade now, this market, let me indicate this thing very well. Now, this market is what? Selling. Now, we want this market to what? To buy. What am I type it up? We want this market to buy. We want to buy dollar at this price. We want buying dollar at this price. Why we are selling dollar at this price? We are saying if this dollar, this price drop to what? This level, which is what? Putting this mark here. Put on this red. Now we're going to type 1,500. Okay, I'm going to make this bold. Please, are we seeing this thing very well?
Yes.
Please get me well. This at this market price now, this is 1.7. Before this market price, this was what? 1.8. I want to make sure this is detailed so we can understand this. We are selling this market, remember. This is where we started selling from. And the market was what at this market price? 1.9. Market was what here? 2,000. Who remembers when dollar was actually 2,000 naira? As of last year around the November period. December. I say last year, I mean earlier around February, last year, February, March. And 2023, dollar was 2,000 at some point. But at 1.8, they entered 2,000 black market. So now this is it. So this is it at this price. So now this price is the one that is 1.7. And we know that this price will still come down where? How? In the future and do something like this. And do what? Give us what? 1.6. Then touch here. This will now become what? 1.5. Then we will now buy it as 1.5 with hopes that it will go up. Do you understand? Please, if you don't understand, let me know. Hey, guy.
Yeah, we do.
All right. So now you're saying that we are waiting that this market must touch this place before you buy. But the market has not happened. This thing might take 1 day, it might take 2 days, it might take 1 week, it might take 2 months. It has not reached this price level, but you are waiting. Now, sometimes this thing can take the same. Since I'm a day trader, and automatically you're a day trader. You want to be a day trader. This thing might take few hours or minutes, 15 minutes, 30 minutes, 1 hour before you reach here. But you're not like, I'm not sure say this thing fits this zone. Or I can be able to monitor this market, maybe because you are busy and one or two things. You are saying if this market eventually sell and reach here, you want to buy dollar because you believe dollar would, this is the maximum place dollar would reach 1.5 and dollar would just bounce up back. Now this trade now got to what? This trade now got from its 1.7, got from 1.6, tap this zone. Immediately tag here, this is what he did. He tagged me into the trade for a buy. This is the buy. And when he buys, the market buys back to what? 2,000 naira. Do you know you have made profit of how much now? 500. You have made profit of what? 500. Abi?
Yes.
Yes. Because now you're buying at 1.5. Now price is at what? 2,000. Now you have buy back to when market was 2,000 naira. You bought it at 1.5. Now the market has gone back up. Now now you're in 500 profits. 500 naira profits. So that's what the this thing is all about. That particular limit order, buy limit. The same thing for the sell limit. Let me explain this to you. This is for buy. Let me use the text tool. You see, as I'm using all these tools, you guys are going to do the same thing. This is for the buy limit. Now, for the sell limit, you have a form of what? Let's shift it to another side. Take it outside. Take it inside. Take it in here. All right, guys. So now, this is for the sell limit. We have a limit here. Now, this limit now, we have a trend line here. That this market, this one will be what? Green. Say we want to sell this market. Short position, we want to short it. We want to short this market. So now, we are believing that market is coming up. Market is buying from here. And we know when market is buying, giving us higher highs and what? Higher lows, higher highs, higher lows, higher highs, higher lows. We're saying when market touch this zone, this place, so that want it to what? Sell back down. Let's assume now that we bought this trade at what? 1.5. We bought that trade at 1.5. Let's assume we bought iPhone. An iPhone. Let's say we buy iPhone at 1.5. An iPhone at 1.5. And now let me use a call out to call out. Yeah. This call out to now. See now at this point in time, your profit is going up, and the iPhone you bought at what? Let's assume you bought it at what? 1.5. 1,500 naira. Yeah. From there, it's increasing profit. They're giving you what? 2,000 naira. Yeah. 1,000 naira. It's increasing profit. Give you what? 2,500 naira. It's increasing profit. At this point in time, you're saying if this trade enter 3,000, you are going to what? Sell. Now you're putting it at what? Sell. You want to sell at what? 3,000 naira. Remember, I bought the phone at what price? 1.5. Now you want to sell at 3,000 naira. Let me use the text to sell. Now, as this trade now hits this zone, remember this candle here, this thing stands for what? 3,000 naira. It stands for 3,000 naira. Immediately it hits this 3,000 naira block here. Immediately it hits it like this. What did the market do? The market started selling. A red candle. Selling to give you what? Profit of what? How much? How much is now? Remember that you bought this thing, you bought it at what? 1.5. Remember, you bought this particular trade at what? How much? 1.5. Now you are buying it, that you have started making profit from it. 1.5. From 1.5 that you bought that thing, oh, it's in now, the thing has long and it has reached how much? 3,000. Now you're telling yourself that 3,000 is enough profit from you. Means you've made why how much? 2 times your investment. What do you do next? You sell. And look at how you're selling it back down. Now you've sold that stock you bought back down. As you sold at this highest point, you've made your profit back of 1.5. Please, do you understand? I know I used 2 scenarios here, but
Yeah.
I want you to, I want to know if you understand. Why is this? Okay. All right. Please, do you understand? Or should I keep explaining this concept?
Yes, I do. But I don't know for her. So I can't
Say,
speak
oh,
for her.
all right. So now, there's what we call buy stop and sell stop too. Buy stop and sell stop. This is for buy stop and sell stop. You have a market price like this. This is a buy. Okay. You have your buy limit here. This is your buy position. That's your long position. Eh? Now, market is what? Yeah. Giving higher highs, higher lows. It's buying. It's buying. It's buying. It's buying. Eh? This is what? Green. Market is buying. Market is buying. Market is buying. You're telling yourself that buy stop. You're telling yourself that if this trade keeps buying, you're expecting this trade to maybe reach somewhere around here. Eh? This is your trade range. You're expecting it to reach somewhere around here. You're saying if this trade, you believe that it will keep buying without reversing till it reach this zone. That's what it means. So you're putting an order here, buy stop. The buy stop now, you see that it's not a limit. A limit is a stop. A limit will stop you in a zone and react there before you can go the opposite direction. But a stop, a buy stop or a sell stop will keep going that same direction. Do you understand? A limit reverses
Yes.
a limit reverses direction. Like this one now. Remember, it was a sell. When it hit a sell, it became a buy. That's a buy limit. This one was a what? A buy. Then when it hits this sell limit, it became what? A sell. Now, but a buy stop, we keep going that direction without stopping. You understand? Why a sell stop? Why a sell stop? Huh? Right. Sell stop. A sell stop, you're saying that this market is already selling. Yeah, creating what? Lower highs. What am I doing? Say this market is already selling, creating what? Lower highs and what? Lower lows. Creating lower highs, lower lows. They are believing that when this market gets to this zone, to sell back down to this zone. Yeah, without stopping. That's what a sell stop is. Change this to red. Do you understand now?
No, can you explain that again? The
All right.
sell stop?
The sell stop, just like the buy stop, the market is already selling before, right? Or selling. It's selling. Now you're saying that a sell stop now, when it gets to this zone, it's not going to reverse. It's going to what? Sell through it and hit your what? Take profit. Still go in that direction. Do you understand? You're saying that
Yes.
you're saying that if you sell naira now, at say naira is 1.7 now to $1. You're telling yourself that if you sell naira now, that it will keep selling. Naira will keep selling till you reach your profit. Naira can sell down to 5,000 if the economy keep going bad. That's what you're telling yourself. Because naira value was high before. Let's say the value was high, maybe like it was where 100 naira to $1. But because of it has lost value, it's selling down. The more it sells down, the more the naira is turning to 1,000, 1,2, 1,5, 1,7. Now you're saying if the way you're seeing naira will sell against the dollar till they get to this zone. That as the dollar is coming up, let's assume this is dollar. Let's assume. Sorry. Uh, okay, guys. Let's assume this is dollar. Let's assume this is what? Naira. You're saying that this dollar will keep rising. Why this dollar will keep falling? You understand now? Hello, guys. Please, do
Yes.
we understand?
Yeah.
All right,
Yes.
all right, that's good. All right, that's good. I want us to really understand this thing. So that's it about buy stops and sell stops. I'm going to teach you how to use it on your MetaTrader app. I'm going to teach you how to use it on your MetaTrader app so we can have better understanding. Then we have trailing stop. And we have other things that are not really important per se. Because I'm trying to cut you guys' journey to something more meaningful. So we're not going to talk about those ones. But what a trailing stop means is this. A trailing stop means As you are getting into profits, let's assume this is your position 2. Let's say this is your position 2. Eh? And this is your risk. Before this is your risk. Remember, this place is your risk. Yeah? Let's assume now this risk is what? This risk is what? $10. This risk is what? $10. 10. This risk as is $10 now. The more as this trade is going up, as it's going up, eh? Let's not agree. As it's going up, giving you profits. Remember, you were risking what? $10 before. For a trading stop, what you do now is, as you have risk here, you see that this trade has come up here and has given you what? Now, remember, you were risking here, no money before, right? Then it came up here small. Then it gave you what? What did this place give you? This place give you what? Let's assume,
Profit.
yes, profit of $10. You will move this your $10 to what? Half, which is what? $5. It's not going to be $10 again. Remember, you're risking $10 before. Now it's going to be what? $5. Now you're risking half of what you invested, Abby. Remember, now it is
Yes.
now how much? $5. Now, if this trade again go up and give you what? Up here and give you what? 20. Let's assume this trade comes up here and give you what? $20. Now you remove this your risk, this thing you're risking before, and come up here where you had your entry and turn it to what? What you turned up that trade to now? Zero. You are risking zero. Zero. Eh? You're not risking anything again. Now you are in profit, but you're not risking anything. Your money is not at stake again. Now, when this trade come up here, and give you $30, $30. Eh? Now you move this trade to this place, and what? Now you are taking from the market. You know, before you're not risking, you're risking $10. $10 on to what? $5. $5 on to $0. You're not risking anything. Now you are taking your profit, you are securing your profit down, that just in case the market move against you, you have saved some profit, have you? Now you are making what? You are taking what? $20 into your as a profit. But you have not closed the market, so the market is still running. If this market eventually stop here, let's use our caller to assume this gives us what? $50. $50. You've secured what? A whole $50. But let's assume this trade did not reach here. After I reach up here, after I reach this $30, it does reverse and go against you. Do you know what you have done? You have secured what? $20. And this trade has what? You did not lose in this trade. Remember, your profit was first $10. I mean, your risk was first $10, then $5, then zero. Now you're not trading again. You're risking the market's money, and now you've secured $20 from your risk. And because you've secured $20 from your risk, even if this trade go against you, you're in profit, Abby. You're not in a loss. You've made money that day. So now, but if this trade did not go against you and it goes to hit your take profit, which means you'll be securing what? $50 and not $20. But if it goes against you, you are what? Securing $20. That's what a trailing stop means. A trailing stop means following your trade, like shifting your stop loss level. Shifting your stop loss level. If you were in my trading group, my trading signal group, you hear sometimes when I'll tell my students to, like, I'll tell them that, okay, or people taking my signal subscriber, I say, shift your stop loss to so level that we're in profits now. So market does not go against you. Means you'll not be risking your money again. You're risking the market's money. Is that self-explanatory? Because when you read the notes,
Yes.
all right, you see more of what I'm talking about. So guys, we have less than 1 minute on this Zoom. I'm still going to call on WhatsApp later. But I want to know if we have a good understanding of everything we have done here so far. Because I think this is where we're
Yes.
going to bring it to an end, so we can reset for tomorrow. Are we good?
Yeah, I am, but I don't know for
All
how
right.
to.
All
Yes, I'm
right.
fine.
All right. So no problem. I'll see you guys tomorrow then. I'm going to send this video, the link, to the group so you can watch it again. I'm also going to send this. I want you guys to replicate this as your assignment on the platform and send to me tomorrow. I appreciate that.
This last one or the one you posted
Yes.
before?
No, this last one. This last one.
Are you gonna send us the screenshot?
Yes, I'm going to send a screenshot.